Let's see whether we get there because the targets are set. But Anuj, the big debate has been, have IT stocks bottomed out? And you have done some number crunching and some valuation check on that as well. Tell us more.
Yeah, Nigel, for last 2 weeks, I'm trying to put a bit of an ahead of the curve sort of analysis on, how people can benefit. Last week we spoke about quota, maybe that's bottomed out. This week we're putting a spotlight rather on IT, whether that's bottomed out. Now, early days yet, I must say, but signs are encouraging. And after a long time, actually, I personally am looking at IT rather positively. Now, this is what the indices have done, and Indian IT index has actually mirrored Nasdaq's performance. Nasdaq has rallied about 10% from the lows, and Nifty IT has also rallied about 13% from lows. And look at the distance from the top. For the Nasdaq, it's a good 31%, and for the Nifty, it's a good 25%. So make no mistake, they are still in bear market. But what was the catalyst? The last US inflation number was a big catalyst because that led to belief that the interest rates might be soon to peaking out. And if that is the case, then the whole worry about the valuation reset could be coming to an end because the IT space is very sensitive. In fact, it's the most sensitive to US interest rates. Now we need to see if the US avoids recession. That I think is very important. Now, look at very interesting data. This is the Nifty IT stocks. They saw FI inflow of $317 million in October 16 to 31 period. This is the period when the FIs actually started to buy in Indian market after consistent selling. This is first decent buy in IT in nearly 15 months. November 1 to 15 data is not available. My sense is you would see an encore of that. I think it's explained best by a picture. The picture would come up for you. Look at that blue bar. That's the October 15 to 31. You'll have to go all the way back to 21 to have that kind of number. Other than that, FIs were consistently selling all the IT stocks. So that's a big change. Now the earnings season ended, so I was just looking at what happened. What was very interesting was that despite all the fears, the revenue growth remained quite healthy for IT companies. In fact, large cap IT companies delivered 2.9 to 4% QOQ revenue growth, which is quite good. And the deal win also remained quite robust, though the management commentary was a bit cautious. The other important parameter, which is important from the valuation point of view, is that the trend of decline in EBIT margins reversed. EBIT margins are still below pre-COVID levels, but at least they're better than what they were, say, a couple of quarters back. The only worry here, and this is courtesy an ISEC report, is that the headcount addition moderated to 2.2%. Why is that important? Because the revenue growth and headcount growth, they move in tandem. If you look at this picture, this will beautifully explain for the last many years, this is how revenue growth and headcount growth move absolutely in tandem. I mean, revenue growth goes up, headline growth, headcount growth goes up, revenue goes up. So if revenues, if headcount has fallen to 2%, then that's a bit of a worry. That's the only worry. But the one picture which gives me a bit of a comfort now is the valuation picture, because I'm old school, I look at valuations. TCS current valuation is 26.7 times, way off the peak of 34. 5-year average 25, very close to that. Infosys 24.8, and Infosys has got a bit of a re-rating versus 32 peak, 21.5 the average. Look at Wipro. Wipro has actually fallen below its 5-year average. It's 17.2. Its peak was 29. It's below its 5-year average, and that's HCL Tech. 19 is the multiple. Average was 16, but you get a sense that they're not horribly expensive, which they were about 6 months back. And I think the next plate would explain this in terms of individual stocks. This is TCS's forward P. In November 19, this is where TCS used to trade. Look at what the peak valuation was. Look at where the trough valuation was and where we are now. You could argue that we are now in some kind of a mean reversion. Infosys, this is where the valuation game started. It reached at its peak there, bottomed here, and now again we are close to the average. Wipro, I think Wipro beautifully explains this. 17.23, we're practically at almost average valuation, and HCL Tech as well. Even if you look at these as charts of stocks, you will get a sense that these were in uptrends, had a decline, and that uptrend is getting reversed. So again, I'm saying that early days yet, but signs are there, Sonia, that IT stocks might just be bottoming out.
Okay, and I guess at the end of the day, a market is all about finding stocks at reasonable valuations, right? Where there's valuation headroom, and clearly, as you saw that chart, there is perhaps more valuation headroom in IT stocks. Let's slip into a quick break. When we come back, we'll discuss market fundamentals. We have Mihir Vora of Max Life Insurance joining us in just a bit. Stay tuned.